The people were adamant with me that the Fed was not going to be hiking rates again. It was done. I told them, no, I don't think so. That's not the Fed's mentality. They're going to do it again. And guess what? We have an article here on kitco.com, and it kind of says what I thought was going to happen. It says the Fed to hike rates again in November. You don't say. You don't say. It says rate cuts coming only in, get this, 2025. Let's scroll down here and see what they're talking about. The Fed is going to do its damage. It's going to have its pound of flesh. It says against most market odds, the Federal Reserve can still surprise investors with an additional rate hike in November. I think that they are, with a higher for longer narrative. Listen, the inflation had gone up again. Then they did the little just maintaining rates steady. Why would they not raise interest rates again to combat what is seemingly stagflation, in my humble opinion? It says, with a higher for longer narrative yet to filter through the macro environment, said Pat Levecchia, CEO of Oasis Pro. At the September meeting, the Fed followed through on a hawkish pause, promising higher for longer interest rates as economic growth continued to be stronger than expected. So expect more bankruptcies. Expect more people to be laid off and lose their jobs. I've been seeing videos all about that, people being laid off everywhere, right? They're keeping it real quiet, aren't they? Yes, they are. That's number two. We'll see what happens with mortgage rates. This is not going to be good. They're going to crush banks a little bit more. They're strangling the banks with these new regulations, but they're going to crush these banks even more when it comes to commercial real estate. So that's a problem. How much longer can these banks sway in the wind before they crash? And I'm all about it because I'm going to make some money off them when they do crash. I'm going to make a lot of capital off those banks when they fall. But how much longer can they survive? You know, are the regular people actually, not financial advice, of course, right here, but I'm just asking a question. Are the regular people prepared for that? Do they have some cash on the side? And I'm not a big supporter of cash. I'm not with the mind state cash is trash, but like I can respect it if people deal with cash. That's up to you. I don't have anything to do with that. I'm more of the mind of gold, platinum, silver. But do the people have anything where they have something on the side just in case the banks go down, where they can access their capital and it's not locked up? Because when the banks go down, bank runs happen. So I always keep that in mind. I like to say that because a lot of people, they just forget about bank runs. Then something happens and guess what? They're one of the people running to the bank, of course, adding to the problem. So, I mean, the Fed is going to do its damage and we'll see if they go through with this. But major things happening, folks. Let's move on here. Right. So this one here, this article is from finance.yahoo.com. Hope you're all having a good day out there. Please subscribe if you have not subscribed. And so this article is titled Panic Creeps In. Panic creeps up as Vix curves invert for the first time since March. Is that so? It says the U.S. stock sell-off. You don't say everything's been selling off. Everything's been red. They raised the treasury yield. Of course, everybody's going to go devour those good treasuries. That liquidity has to come from somewhere. It says here, the U.S. stock sell-off is spreading panic among volatility traders at a scale unseen since the regional bank crisis in March. In perverse Wall Street logic, that's raising hopes that the equity route is on its last legs. As stock losses gathered pace Tuesday on still surging treasury yields. I told you, see? Yahoo said the same thing, right? Those treasury yields are terrible for everything else. It says derivatives pros priced in more turbulence in there and now than in the future. The SIBO volatility index gauge of implied price swings in the S&P 500, known as the VIX, surged 2.2 points to 19.80. Pushing the spot price above that its 3-month futures for the first time since the turmoil in U.S. lenders earlier this year. The setup known as inverted VIX curve has occurred twice in the past year, and both instances heralded market bottoms. All right. There you go. So let's move on here to another article. So this is from MarketWatch.com. Bond markets is sending recession warnings, although we know it's really a depression. Yeah. M2 Money charts will tell you that. It says falling U.S. bond prices are sending a signal that a recession could finally be around the corner. You don't say all these people suffering. They can't afford apartments. They can't afford houses. They're getting laid off. It's not a recession. Oil prices going up. They have a bad geopolitical international relationships that's causing cuts in oil, causing everything to skyrocket. Food prices going up, gas prices going up. That's not a depression, though. People are making, if you try to do equivalencies of what people make now to what they made in the Great Depression, people are making less as far as their purchasing power of their dollar than they did then. That's not depression level stuff. Come on now. All facts, by the way, folks. Says here, falling U.S. bond prices are sending a signal that a recession could finally be around the corner as they push treasury yields to their highest levels in 16 years, said Double Line Capital founder Jeff Gundlach. He will be watching Friday's September jobs report for the next clue. Man, take those what are they going by? The job postings that the companies just leave up all the time. They don't even take them down. What are they using for this data? I don't proclaim to know. I don't proclaim to know everything. I don't, but I know that a lot of this jobs data is very, very suspicious in my humble opinion. Not to mention, are they taking into account with these job reports that they just authorized 500,000 new people to work in the United States? So there's going to be a war over those jobs if there's not one already. It says he will be watching Friday's September jobs report for the next clue that a recession may be imminent. I think it already passed. We're in a depression. In a post on X, the social media platform formerly known as Twitter, from Tuesday evening, Gundlach warned that the rapid normalization of Treasury yield curve, a measure of the premium that investors receive from investing in long-term and ultra-long-term bonds, is a sign that a U.S. recession, for which investors have been bracing since last year, might finally be around the corner. To each his own. I believe it's a depression. And I think everything's going to prove that. And what people are about to see in the next few months is going to be absolutely insane. Unless things rapidly change. Can they change? Yes. Would they be difficult to change? Yes, they would. You need people with solutions to be in position. Right now, it doesn't seem like anybody wants to issue any real solutions. So now this article here is from oilprice.com, just to give you a little bit more, show you. It says here, OPEC Plus leaves production levels unchanged. This is after so many writers were saying, and so-called experts were saying OPEC was not going to be able to maintain the cuts. They're saying, yep, we left them the same. It says the OPEC Plus panel reviewing the oil market ended a brief meeting on Wednesday without recommending any changes to the current oil production policy, hours after Saudi Arabia and Russia said in separate statements they would stick to their respective voluntary supply cuts by the end of the year. The Joint Ministerial Monitoring Committee, JMMC, of the OPEC Plus group, which met via video conference today, affirmed the commitment of the several OPEC Plus members and thanked Saudi Arabia and Russia for their voluntary supply cut. Thank them, wow. And, quote, expressed its full recognition and support for the efforts of the Kingdom of Saudi Arabia aimed at supporting the stability of the oil market. Yeah, they want to make money. They're going to do that by all means. It says the committee will also, quote, stand ready to take additional measures. Whoa. The world better hope that they don't. Additional measures at any time, unquote, OPEC said in a statement. The next JMMC meeting is scheduled to be held on November 26th. So there you have it, folks. There you have it. We'll see how everything goes. I hope people are tightening up their belts and getting ready for a rough ride, because it definitely is going to be that as of now. So now that you have that information, what are you going to do with it? So until next time, folks, let's get to the money.